Hey everyone, me Kevin here. In this video, I'm going to give you my strategy for investing in the Coinbase direct listing, which happens tomorrow on April 14th, 2021. And in this video, I'm going to give you my price targets and my strategy. So if you are a regular person following along and you lose money, it's your fault. If you make money, well, congratulations. And if you're a hedge fund and you front run me and make it not possible for me to do this, you suck. All right, folks. Now that you know that this video is for entertainment purposes, well, this video is for entertainment purposes only, and don't sue me, bro, if you lose money, let's get into some of my conclusions. Okay, first things first, obviously, by this point, you should already know what Coinbase is. We're not doing an introduction on Coinbase. I already did a first impressions video of Coinbase. We're getting right into the numbers on this. First, there's obviously a massive adjustment that has happened from transactional revenue at Coinbase. And there are two big forms of revenue at Coinbase. And this is where you really have to pay attention to the company because you have to know these two different forms of revenue and where they come from. So the big form of revenue, number one, is transactional revenue. I go in there, I buy Bitcoin, I sell Bitcoin. I go in there and I send somebody Bitcoin and I pay a fee, or I receive Bitcoin or whatever and their fees charged. That's transactional revenue. Whereas subscription and service revenue has to do with saving, borrowing, lending, staking, building, distributing, storing, and paying. So the light blue right here is where growth is coming to Coinbase at the same time as growth is coming to the transactional revenue side. And I'm talking about a lot of growth. This right here is the income statement for Coinbase. You'll see that the revenue ended 2020 is $1.14 billion. And their other revenue, which would be like those services and subscriptions, was $136 million. Now, what you can do, because this is the year ended 2020, is you can now jump on over to the 8K and you can see that in the first quarter of 2021, their revenue went up to $1.8 billion with a net income of about between $730 to $800 million. That 730 to 8 mil will become important, or 800 million will become important in a moment. But the big thing here is we can then determine that this total number right here is going to be about $1.8 billion. But the beautiful thing is they also gave us an indication that the net income number should be somewhere between 730 and $800 million, which if I have this top number and I have this bottom number, and they even tell us about how much money they're going to spend in taxes, it makes it a lot easier for me to fill in what's in between, especially since I know that their motivations are to start spending up to 15% per year in advertising going forward. Maybe not this year in 2021, but in the long run going forward. So I have all of the pieces of the puzzle that I really need to try to make some projections out to, say, 2024 on this company. And I'm going to come up with a bear, base, and bull case scenario for this company. And I'm using information that I collected from the report, like 15%, advertising going to 15%. If you look right here, advertising is not at 15% right now. You'll see sales and marketing right here, which is $56 million. That ain't 15% of $1.2 billion. So we've got a little bit of work to do. Now I'm gonna spare you of a lot of the details. In fact, in my Stocks and Psychology of Money course, I put together a 49-minute breakdown of how I came up with what I'm about to show you. And I'm just gonna give you the bottom lines. And if you wanna learn how I do these things, well, obviously the program is linked down below for you. But let's focus on the bottom lines because that might be why you're here. So now we've got a little bit of insight. That insight I just gave you is going to be really important for understanding these bottom lines. So first things first, the private valuation for this company is $90 billion, which puts it at a share price of about $344. I do not expect that Coinbase is going to sell for anything even close to the private valuation of $344. It's wishful thinking, it's a dream. It's kind of like the listing reference price of $250 per share. It's a joke. You're not getting Coinbase for $250 a share. And if you can, either I screwed up on my analysis or buy the crap out of this, okay? It's that simple. If you can get this for $250 a share, stop watching right now, buy, okay? Unless crypto has gone to zero. All right, the street values this at closer to $100 billion, which means we should easily see this $250 price go to $383. Like this $250 thing is like a $1 auction on eBay. It's fugazi, whatever, however you want to pronounce it. It's a load of crap, okay? this not unlikely, notice I said not unlikely, not likely. Anyway, not unlikely. It would not be unlikely for Coinbase to double tomorrow, which would put it above the street's valuation. Would not surprise me. There's going to be a lot of euphoria and buying pressure on this. That puts it around a share price of $500. That would not be unlikely. Now, is that a fair deal? Well, let's talk a little bit more. First, a very, very rudimentary way you can compare is you could just look at different valuations. Well, Stripe is valued at, say, I think Stripe's around $90 billion in the private market, which is kind of where Coinbase sits. And so, okay, we think it's probably at least that, right? Robinhood right now in the private market's worth somewhere between 40 to 60 billion. It's probably going to be worth like 90 to 100 billion. PayPal is worth 322 billion. Square's worth 124 billion. SoFi is super tiny. That thing's worth, I think, like 15 or 16 billion dollars. But it's tiny relative to the amount of monthly transacting users. So what I want to do is, that's just a really rough way of kind of comparing, looking at some comps. But instead, what I want to do is I want to look at a bear case scenario, a base case scenario, and a bull case scenario. And I know this looks like a lot of numbers, but it's really, really simple. I'm going to make this really, very easy for you. So all I'm going to do is I'm going to show you the bottom lines here. Again, if you want to know the details, I've got a course where I teach exactly how I break these things down. And that's linked down below. And you can use that coupon code as well. But let's just get to the bottom lines. So what I did is I did a bear case scenario for Coinbase, and I took something that Wall Street talks about every freaking day, and the mainstream media is drilling Coinbase for. They're like, hey, well, isn't there going to be a race to the bottom in transactional revenue? What happens when everybody sets their commissions to zero and Coinbase gets screwed because they can't charge those big fat fees anymore? And I go, fine, zero. I will literally set your transactional revenue to zero. And that's my bear case scenario. Well, wait a minute, Kevin, how do they make money if you set that to zero? Well, I'm projecting out to 2024, and I'm assuming a 70% growth rate, see, 1.7, 1.7, 1.7, 1.7, times their current services and other revenue of 162 million. So I'm literally taking zero transactional revenue and assuming 70% growth in their other revenue for 4 years. The last growth that they had was 126% for other revenue. And here's the cool thing, and this is straight from their S1. Like, you could read it yourself. It's in there. There's a segment in their S1 that says of the customers, of all the customers they have, 21% of the customers use other products, those other services and other revenue segments. When they use those other revenue segments, the income Coinbase gets per customer goes up 91%. Basically, if you touch any other product Coinbase has other than just transacting, let's say, cryptocurrency, you literally and essentially double the revenue that Coinbase makes off you. So you want to double the amount of money Coinbase makes off you? Just use some of the other products they have. And it's fine. Like, we want companies to make money, but the point is that segment has the real potential to explode. And I don't think I think Wall Street's going to be stuck on this transactional revenue number. And if you extrapolate this transactional revenue number, dude, Coinbase to the moon. Like, if you literally just take the growth we saw from 2020 to Q1 2021, and you take that transactional revenue, go, yo, this is going to the moon, which I don't think it is. I think that number is going to come down over time. Then you could literally say this is a $1,200 company. Easily. Like, you could easily make the case for that if you just use transactional revenue. I'm a conservative investor. I'm going to put $0 here, okay? I don't like a lot of risk. So I'm putting $0 here, and I'm assuming 70% growth over here. Then I'm also going to assume that 15% marketing budget, and I'm going to extrapolate some of the other numbers from prior years. Again, if you want my explanation for how I craft these spreadsheets, link down below. Okay, operating income. So that brings me to operating income in my bear case of about 635 billion. If I take off a provision for taxes, which I use taxes that they give. In fact, you could see that over here. The 8K 2021, I assume taxes of about $250 million, which, just so you can fact check that really quickly, take a look at this. So look at this really quick. See, operating income I got to, and this is where I did my extrapolation from. Operating income about $1 billion. Provision for income taxes, $250 million. Net income about 758 million for Q1 2021, right? If I go over, because we don't actually have that info yet, we only have rough estimates. When I look over here, the 3 months ended 2021, we'd have net income between 730 and 800, and taxes paid between 260 and 225, with some miscellaneous adjustments, stock-based compensation, things like that here. I generally, I keep these things simple so I can extrapolate a little bit. And those are the numbers that I'm using over here to extrapolate off of. I'm removing the stock-based compensation as those are things that come with fluctuations. It's not worth even having a conversation about right now. Anywho, and keep in mind, all this information is based on a quarter. So we get a net income in the 2024 figure of approximately $476 million. If that ends up being true, then we can go over here to this bear case projection right here. And we get an annualized net, which is just basically taking that number times 4, divided by the shares outstanding, gives me earnings per share of 7.3. Then I have to make an assumption. I'm going to assume a 80 times earnings multiple in 2024, which I think that's reasonable, because if I go over here, take a look at what some of these companies are selling for to 2022. Tesla's like 111, Enphase 55, Square 141, Peloton 141, Palantir 114, Etsy, EXPI, Nvidia are down in the 40s and 50s range. I think 80 is reasonable for Coinbase projecting to 2024. So I think this is very reasonable. And if I use that estimate for my bear case, I get to a price target of about $584, which means if I pay $400 for the stock today, I'd get about a 9.93% compounded annual return for those 4 years in my bear case scenario, assuming transactional revenue goes to 0. Okay, now what I did is I did the exact same thing for my base case and my bull case, except the difference between my base case and my bull case is simple, and the bear case. So in the bear case, I used transactional revenue 0. In my base case, I did transactional revenue in 2024 at 50% of what the transactional revenue is in Q1 2021. So I'm literally assuming between Q1 2021 and 2024 that transactional revenue falls 50% because of price competition or whatever. This gives me a net income of 678 mil. And then in my bull case scenario, I assume that transactional revenue stays flat. So Q1 to 2024, the entire 2024 annualized, we stay flat. So it literally, in none of my scenarios, price any growth in for the next 4 years in transactional revenue. But they still include that 70% growth in that non-transactional revenue, which is really, really important. Okay, if I put both of those scenarios in here, take a look at what we get. So we zoom in over here, we get EPS, here are the different EPSs. If we want to pay 80 times earnings, this is the result we get. We get a price target of 830 to 1,076 in 2024, depending on which scenario you look at. Which means if I pay $450 or $500 today, I would expect either a 16.55 or a 21.14% annual compounded rate of return. So, folks, bottom lines. Okay? Again, if you want to understand all of the nitty gritty of everything that I did there, and I give you the spreadsheet and everything, this is the kind of stuff that I like to teach in my fundamentals of stocks and psychology of money program. It's in that program already. It's live already. So here are the bottom lines. The best buy for this company, in my opinion, is buying this company under $400. I don't think it's going to happen. But if you buy it under $400, you're able to assume 0 transactional revenue, 80 times earnings in 4 years, because this company's still going to be growing. So 80 times earnings in 4 years, I think, is very reasonable for a company that's still going to be growing. 15% ad spend, 70% growth in non-transactional revenue, and you'll take that $400 to $584, and you'll have that internal rate of return of around 10%. That's not bad for a bear case scenario. So in other words, if you're bullish and you could get this under 400, load the boat is my take. Okay? Bear case. If you buy it under $450 Same thing, except 50% transactional revenue, still 70% growth for non-transactional, 80 PE, 4 years, growth continuing, blah, 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 blah. That gets you about the 16.55% internal rate of return. That's good. And then if you're super bullish, you buy it under $500. And this assumes transactional revenue stays flat. So very, very, very simple, concise bottom line. In my opinion, and don't sue me, bro, if you lose money. It's your fault if you lose money. This is my analysis, and it could have been totally wrong. You buy Coinbase under $400 very heavily. It's unlikely to happen. You buy up to 3% of your portfolio of Coinbase up to $450. So you buy moderately up to $450. Heavy might be like 5%. 3% of the portfolio up to, say, $450. And if it goes up to $500, maybe 1% of your portfolio. If it goes over 500, it really depends on my mood and how interested I am in paying a premium for this. If it goes over $600, forget it, lols, GG, congratulations, Coinbase, I'll buy you on the dip. There you go. That is a bottom line strategy that I have for Coinbase. Took me a few hours. Actually, it probably took me somewhere around 9 hours now to put all of this together. Usually these deep fundamental dives take quite a while to put together. So hopefully you appreciate this very condensed version that I've been studying over the past few weeks here. Hopefully you appreciate it. If you did, consider subscribing, consider sharing. Let me know what your comments are down below. If I missed something, let me know. And folks, see you in the next one. Thanks for watching. Bye.